If you've been trying endless trading strategies and you can't find one that works, look no further. Because in today's video, I'm gonna give you a simple 3-step process to identify and execute a extremely beginner-friendly, stupid simple strategy. Now, I really just wish over 9 years ago when I started trading, someone would have shown me this because I would have become profitable so much sooner. And by following this simple strategy, I've been having days like this and this. Now, at the end of the video, I'm going to show you a 1-month back test so you can see this actually does work. And with that said, let's dive into the video. So step 1, the first thing you want to do is go onto your charting platform or broker and pull up a 1-minute 10-day time frame. So that means that each candle you see is going to represent 1 minute of time, and we can go and look back 10 days into the past. So we're going to use 10 days of what we'll call historical data to actually go about setting up this trading system, this trading strategy, right? Now, step 2 is you're going to head over to the drawing tools if you're on the TOS trading platform. Regardless of the platform you're on, you should have a way to actually go about charting out the percentage on a chart. And you're able to essentially click and drag to see how much percent has been covered, right? And so the idea here is that we're going to take this tool, we're going to go through each and every day, and we're going to chart out the high to the low, or the low to the high. Doesn't matter. It'll be the same percentage. Now, step 3, and we're going to go back to yesterday. And what we're going to do is we're going to chart down to the low at 99.48. We're going to click and we're going to drag up to the top. And we're just going to do this during open market hours. We're not going to use aftermarket and pre-market. Now, we can see here 5.68% was the percentage covered from yesterday's high to yesterday's low. So what we're going to do is we're going to pull up our calculator and we're going to add all of the daily ranges together. So let's say 5.68 was day 1. Now let's go back to the prior day and we're going to look to find the day's low, which would be here at 103.73. We're going to drag up to the day's high, and that's going to be 8.13. So we're going to add 8.13. Now let's go back to the prior day. We're going to take the day's low, drag up to the day's high, 12.99. We're going to add 12.99. So I think you're starting to understand how this works. What we're doing is we're calculating the daily range. So how much area that stock moves during one given day. Now keep in mind, stocks like Apple or Microsoft or Amazon, they're going to move a whole lot less. Maybe the average daily range, which is what we're trying to find, will be 0.5% or 1%. Now, on the other hand, other stocks might move 10, even 15, or maybe 3 or 5% a day. So it really just totally depends on that given stock. Now, we're trying to use as much historical data as possible. In this case, this is going to be 10 days or 9 days, just depending on when you do this, worth of data. So we're using this historical movement, how that specific stock that we're looking to trade has behaved, and we're trying to find the average. And so you're going to go through and you're going to do this for the other days, right? You want to go through all the days, keep going back and adding them up. So once you've gone ahead and you've added up every day, you'll get a number. Okay, so in our case, it's 124. Now we did this over 9 days, so we're going to divide 124 by 9, and we're going to get 13.77. So that means our average daily range on GLW is 13.7%. Now let's go back to today, okay? We're going to open up current day. So what I'm going to do typically is when we're trading, we want to understand that we're going to be working with our win rate, which means how many times are we right out of 10. That could be 8 times out of 10 we're right. That could be 4 times out of 10 we're right. And we need to understand that the win rate alone doesn't matter. What matters is the win rate, okay? So win rate or win percentage with the risk to reward, or the R to R. So if you're taking a trade, let's say your risk is 1. In order to make 3, that is going to be a 1 to 3 R. Now, depending on your win rate or your win percentage, that is either going to be a profitable trading system overall or not. Now, what we want to do is take the 13.77. Again, this is going to be our average daily range, and we're going to divide that by 4. So that's going to be 3.44. So what we're going to do is we're going to take our drawing tool. We're going to go back to where GLW was trading at right before the market opened. So you're going to do this on any stock you're trading. Go right to that exact price right before the market opened. And we're then going to chart up 3.44%, which would exactly line up, if we draw a trend line here at the top, with our high. So again, we just took our average daily range over the last 9 days, divided that by 4, that gave us 3.44, and then we charted up 3.44%, which stuck us right here. And I would like to say coincidentally, but it's not a coincidence, that was today's high. And you can see how we actually tested that area once and twice at 107.65. So that would be our take profit. Now, I know this is we'll call it historical example, because our take profit would have already been hit. And you want to do this before the market opens. So you can do this after market, pre-market, whenever you have some free time. You'll pull up a stock, you'll flip to a 1 minute, you'll go through the last 9 to 10 days, you'll calculate that average daily range. And again, just take every day, add all the days up and divide them by 10. And then you're going to divide that number by 4. And then whatever that is going to be your take profit. Now, when it comes to the risk to reward, if we're dividing our average daily range by 4, typically we want to trade a 1 to 2R or a 1 to 3R. That means that our reward is twice our risk or 3 times our risk. And so in this case, we're going to take that 13.77, and because we used our divided by 4 to get our take profit, well, we want that stop loss to be half of our take profit. In other words, we want our take profit to be twice as big as our stop loss. So we're going to divide 13.77 by 8. Okay, so 13.77 divided by 8, that's going to give us 1.17. We're going to go back to our drawing tool here. We're going to go to right before the open, and we're going to draw down 1.77%. Okay, so 1.77% would put us right about here. Now we can drop our stop loss in here. We'll change this to red and we'll hit OK. So pretend that none of this has happened today. You would have done these calculations off of the open. You would have set your stop loss and your take profit, and this would have been your trade plan. So you would have obviously hit your take profit, and stop loss has not been hit yet. So whatever happens first, if your take profit gets hit, you're going to take profit. If your stop loss is broken, you're going to stop out for a loss. That would have been a really nice and clean trade. Now, just to summarize, you're going to just go ahead. You're going to draw the daily high to daily low. You're going to add up 9 to 10 days. You're going to divide that by the amount of days you added up. You're then going to get your average daily range. You're going to divide that average daily range by 4 to get your take profit. And then you're going to divide that average daily range by 8 to get your stop loss. Now you're presented with a 1 to 2R. Your reward is 1. Your risk is 2. You would have entered off the open and you would have taken profit right here. So that was a beautiful trade on GLW. Now let's run through another example. Now let's just say Apple, for example. We're going to not look at today, right? Because today has not closed. We're going to go to yesterday. We're going to chart out the low to the high of day, which was 2.04. So 2.04 plus, we'll go back to the prior day. Got the low to the high, 1.7 plus 1.7. Go back to the prior day. We've got the low of day right at close, the high of day up here, 1.51. So we had a couple big days in there, but we got 24.32. Now we're going to divide 24.32 by 9. That is going to give us our average daily range of 2.7. Now, Apple is a less volatile stock. If 2.7 is the average price that it covers from the daily low to daily high, and that has been over the last 9 days, let's divide this by 2. That's going to give us 1.35. Now we're going to want to maintain our 1 to 2R. So our risk is going to be 1 and our reward is going to be 2. So we have the potential to make 2 times more than we're going to lose. So that 1.35 is going to be our take profit. All right, we're going to go to the open. We're going to chart up 1.35, which would put us right, boom, here. Could not have been more perfect. That is 1.35% high of day. Again, we're going to go here. We're going to draw out our take profit, and that would have been our take profit. And to maintain our 1 to 2R, now we are going to divide 2.7 by 4. So 2.7 divided by 4, right? That's going to give us 0.67. So 0.67 would have been our stop loss. So again, our stop is going to be half. So let's go down 0.67, which would be right here. we will draw out our stop loss, and let's go ahead and change this to red. And now we could see our average daily range, take profit is 2 times our stop. Okay, we've got our stop, got our take profit. You would have entered off of the open, and this would have been the trade. Now, you would have actually, technically, looking at this, been stopped out if you were to use this as a hard stop. Now, here is the little caveat. When we set a stop loss, we want to understand that the ADR is essentially a high probability area where more than likely that stock is going to trade on that specific day. And knowing that it's a high probability area, this is not a hard stop, which a hard stop would mean that the second that exact price is broken, in this case 253.43, if Apple traded down to 253.42, 1 cent below our stop, we'd stop out. Now, because this is a high probability area, we know a lot of the times we're going to trade into our stop, and we're going to trade on our stop. And a lot of the times we'll trade on our stop and we'll move right off of it. And you can see here how we traded down into our stop, and then we moved right off of it to our take profit. So what I do is I give each trade 5 full 1-minute candle closes, or 1 5-minute candle. Again, we're on a 1-minute time frame, so I would wait to see 5 full 1-minute candle closes below the stop loss without touching it. And so, for example, here we could see that that was a 1-minute candle close below our stop without touching it. Again, this candle was touching stop, this candle was touching stop. So this is just the market testing a high probability area and then remounting. So here we could see later on, that's a 1-minute candle, only a 1-minute candle below stop. You can see here touching, and obviously this one was touching as well. So we would have had to see 4 more of those or 4 more of those to actually have invalidated this stop and to close out. So essentially, yeah, give it 5 minutes and wait to make sure that that stop has actually truly been invalidated, because the market likes to probe these areas, whether you're long or short, and stop out traders. So this is one of the most important things that you need to understand when trading this system, is to give your stop 5 full 1-minute candle closes. So with that rule, you would have entered here, you would have still been in the trade here, still been in the trade here, and you would have taken profit. And that's it. That's the system. It's super easy, it's beginner friendly, and it's how I'm making money every single day in the market. And as promised, I'm going to show you some live examples. One trade I took this morning where I made 61% on. I entered on my trading live session every morning over inside my mentorship. I'm trading live in front of my mentorship group students. So they're able to see my trades. They're able to follow along and essentially copy myself. Now, if you are interested, I'll put a link in the description below to my mentorship. You can watch me trade live and copy my trades. Wow, and back up 53% of SNDK. Wow, there goes GLW. Look at that stop. Amazing. Filled on GLW 425, SNDK at TP, up 56%. 60% on SNDK, let's go. What a beautiful one. So that was 61%. You could obviously see our big green line and our big red line with our probability levels there set with our take profit and stop loss. Now, another trade that I'm actually in right now that I'm floating a 130% P&L on. That's right. I'm up 130% live on, during recording this video for you guys. And you can see here my entry when I got in long, and then I have my stop loss and my take profit. Now, I'm still quite a ways away from my take profit, but wow, 130%. Now you can see on my right screen, I'm in another trade, which this trade I'm only up 2% on, so nothing crazy. And you can see how we got really close to hitting my take profit, but didn't get there. The stop loss we tested. We actually tested it. A couple candles here did try to break. None closed above. So with our rule, I am still in the trade. And you can see that by my live P&L here. So 5 full 1-minute candle closes. And we had not even 1 full 1-minute candle close above stop. And I'm still in this trade. So we'll see what happens with both of these. And one of my biggest trades ever was actually just this last Friday, trading this strategy where I was able to make almost 300%. That was 286% profit. You can see here when I posted my entry inside the mentorship, I bought these AMD puts. You can see my fill price and the screenshot here with my stop loss and my take profit. And then at the end of the day, you can see here this beautiful chart where we ended up moving right into our take profit, and I locked that profit in, making a total of 286%. And actually the same day I made another 72% on AMD here, where I entered, closed out that trade before the close. Neither my take profit or stop loss were hit, so I'm gonna get out of all these trades at 355. I'll take my exposure off the table, and I had a total daily P&L of 360%. So again, the link is in the description if you wanna follow along and copy all of these trades. And as promised, here is the 1 month back test. You can see here, starting at the 1st of January to the end of the month, this account was able to grow $12,000. Now, obviously, this P&L is going to depend on how much you're trading with and how aggressive or conservative you're going to be in your trading. But overall, we could see the equity curve here was extremely positive, closing the month at peak P&L. So that's the back test. And that was over 190 trades. Subscribe for more, and I will see you in the next one.